Traders, today we're going to teach you something based on price action. It doesn't matter if you're using NinjaTrader like I am, or TradeStation, TradingView, Thinkorswim. It doesn't really matter. It really works the same way. You just have to apply it to the market and to the charting platform that you're using. Before we begin, I always say the disclaimer on the risks involved with trading. Please don't trade with funds you cannot afford to lose. There are risks involved with trading. So what you're seeing here on my chart are the ABC software as well as the Trade Scalper. Now, each of these we show you exactly how they're calculated, and I think it's important for you to understand what you're doing as a trader. Instead of just seeing signals pop up, we want to actually show you and teach you. So what I'm going to do is I'm going to show you how the ABC method works. I'm just going to remove it here from the chart. I'm also going to remove the Trade Scalper. So now we have a clean chart, and you can see the market is going up, or if you look back here to yesterday, you can see that the market is going down. All right, now I'm using a 5-minute chart, and that really should only depend on the volatility. Sometimes the market's too strong. You have to go with a smaller time frame. So how I use price action to tell me that, I use the ATR with a setting of 4. Most charting platforms have the average true range, the ATR, so you just find it on your charting platform. And now once we have the ATR, let's go to today. What I'm going to do is I'm going to separate out the day into 3 parts. And the 3 parts of the day, I call them the A, the B, and the C for the 3 types of day that exist. Now in most markets, we have a time of volatility, high volatility, right as the market begins to trade, when the bell rings, and you can see that the volatility here and the candles are really large. You can see that on the ATR down here, the average true range. And then as the market continues throughout the day, it's normal, it's typical. Unless there's a reason for more buying or more selling, the market usually gets a little bit slower. So here we have another section of the day. Now each section is 2.5 hours. So we're isolating the opening up until noon, from noon until 14:30, right over here, another 2.5 hours. And so this would be considered the A part of the day, and this is considered the B part of the day. Now if you're looking for a course manual on this method, I do offer it for free at DayTradeToWin.com, so just sign up for a free member account and you'll be able to look at the course and download the software as well for NinjaTrader on how exactly this works. But essentially what I'm doing is I'm separating this out to 3 parts of the day, and then the final part of the day is going to be at the closing price, usually 4 o'clock, which here is 1650. 1615 or 1600. It's a little bit smaller. The C part of the day is only about 1 hour and 45 minutes. So 2.5 hours A, 2.5 hours B, and 1 hour and 45 minutes for the last part of the day. Now this works on the Dow, the Nasdaq, the E-mini. Now if you're looking at other markets that don't have the same amount of hours, obviously it's going to be a little different. You're going to have to separate out the day if you're looking at oil or heating oil, natural gas, which I love natural gas. This will be a little bit different, so you do have to adjust for the markets that don't trade the same amount of hours that I'm showing you. Okay, so now that I have the A, the B, and the C parts of the day, we have to understand the dynamics between these 3 parts. If I know what happens in the A part of the day, I know the market is strong, I know there's typically news events, I know there are large moves, large volatility. If that continues, which it doesn't, typically it doesn't, but if that does continue, then the B part of the day will tell me that the market is in a trend. And what I'm looking for is for the actual high or low of the A part of the day, the first 2.5 hours of today, to break and close above this area right over here. And usually when I think about price action, I think about candles closing, I think about price proving to me that it's going somewhere. So I always teach in my classes 2 consecutive candles closing above or below this area. So 2 consecutive candles is a safe bet. Some of the traders that I work with are a little bit more aggressive, so they use one candle, or as soon as it starts to break, they jump in. It's up to you. I think 2 consecutive candles is the way to go. A lot of the methods that we teach use that principle, 2 consecutive candles closing as proof that it's going somewhere. So it could be the blueprint, it could be the Atlas line. The Trade Scalper doesn't work that way. It's a little different, but I like to see proof that the market is going somewhere before I jump in. So here, as I go push this line here into the future, I can see that we have 2 consecutive candles closing above the A range. So that tells me that the market wants to go higher, and it also tells me it's an opportunity to be a buyer. Now, that by itself I think is great. It's a good move. We have stops, we have targets. So at this point, I'm situated for a direction. Now, if you're using a different type of strategy, even your own strategy, let's say, and you have also another something else that's telling you to go long, great. So the more the better. The fact that we have multiple unrelated methods telling us long or short is great. Okay, so if you have a method that's also telling you to go long, if this is telling you to go long, then that's a good thing. Now, I use either the Trade Scalper or the Atlas line or another of the methods that we teach to also tell me so I can bring it together, put it together. So I'm going to add here the Trade Scalper software. Right over here, the Trade Scalper software, very popular software, and here you can see that there are a lot of long signals, and lo and behold, there's also a long signal happening right as it breaks the high of the A part of the day. We have another long, and we have another long here as the B continues. So for me, if I'm taking a trade, I much rather have a situation where there's multiple methods telling me to be a buyer, in this case, or a seller if it was going the opposite direction. And here is a great example of that. Now, if you're looking at another part of what the ABC method can do for you, here we have the high of the B part of the day. We used to call it lunchtime, but I don't think that's really accurate nowadays. The B part of the day is not really lunch for everybody in the world. Obviously, we're all in different time zones. But definitely the market does slow down typically under the middle part of the day, what I call the B part of the day. And so here we have another range. This is the B range right over here. And the B range now, moving forward in time, is going to have a relationship between the B and the C. Late day rallies, late day breakouts, sell-offs. We have the FOMC right at 2:30 Eastern Time, New York time, which also creates a move. So what I'm looking for is the same thing. The relationship between A and B also happens between B and C. I'm looking for 2 consecutive candles to close either above or below, or if you just want to go with 1 consecutive candle, that's fine. But I'm looking for evidence before I jump in long. The B to C relationship is breaking higher. If I can see that, and there's something else as well that'll help me say, let me also go long. Could be the Atlas line, could be the roadmap, it could be the blueprint. It could be any method that you're using on your own, but this also will be evidence that the market is breaking out late day rally. Okay, so that's what I'm looking for. Or if it decides to go lower, right? So let's say that the market decides to sell off right as we end the day. This is another example that's telling me to go short. Okay, so right now it's neither. Right now the market's trading in a range, and that's typical, common, unless there's a move. So if I add here, so what I'm going to do is going to just remove all the drawing tools, and I add the software that's included with mentorship, and you can check it out at DayTradeToWin.com as a free trial by getting a free member account. I'm going to add here the ABC. You should have this already downloaded and imported into NinjaTrader, and then you just find here the ABC software. This is the suite of software that everyone gets with mentorship, and they have access to the ABC, the Atlas line, the At the Open 2, the blueprint, the multi-lines, the news, the roadmap, the Trade Scalper. So at this point, I'm going to change the color here to Zone B so we can see that a little bit differently. And now what the software does, it automatically creates the areas, the A, the B, and the C. It shades them and colors them, and it also gives you the signal. See the ABC long signal at 44.98, and that's based off the 2 consecutive candles closing. See if I can stretch this out here a little bit. 2 consecutive candles closing above, and so that's the reason for this signal to tell you to go long right there. All the other signals that you're seeing are the Trade Scalper. Now if you're looking at today, this is how it panned out. If you go to yesterday, so just go to yesterday, this is yesterday. So a little different. Yesterday the market went down in the A part of the day. So this is A part of the day. Again, same thing, first 2.5 hours. The B part of the day, here's the B part of the day. And what you're seeing is the market respected the low of A, and it also respected the high of A. So what is this called? In technical terms, we call that a double top. What I like to refer to it, or a double bottom, actually, it's actually the same thing here in yesterday's chart. This is the low, double bottom. This is the high of the day, double top. So this to me is a very simple, common feature of price action, because markets love to test where they've been. So before taking a breakout trade, I always prefer to see it break through the previous highs or lows, because more often than not, the market will test the lows or test the pricing support or resistance and bounce off of it in the opposite direction. And that's exactly what you're seeing. So if you have your moving average crossovers or MACDs all telling you to go short right here, you should definitely wait until it breaks the low of A, or the same thing, breaks the high of A. Okay, so that's the relationship between A and B. So if you're taking this long Trade Scalper signal, or this long here Trade Scalper signal, it's on its way up, testing the resistance, testing the tops, or leading me to an area that it may bounce off. That's fine. But if the order actually happened right at the top, right at the resistance, I would say no, right? Wait until it breaks through, because that's that's a smart thing to do, you would say. Okay, now the same thing, the market's on its way down. Here's a Trade Scalper signal to go short. Here's another Trade Scalper signal to go long. And now you have here this right at the end of the day. You can see what happened. The market tested the high of B, which is actually also the high of A. So the markets was in a big range yesterday. I love markets that trade in a range, because we use the roadmap method to bounce off of the market zip sawing, whipsawing, and chopping around. So the roadmap works great for that. And if the market is trending, it'll break through these zones. Let's do one more day, give you an example. So we'll go back to the previous day. And it's exactly the same thing. There's no mystery to price action. You either know it, you learn it, you understand it, or you don't. So price action helps me understand the market's going down, it stops, and now we have the B part of the day. So this B part of the day was nothing. It didn't break above the high of A, or didn't break below the low of A. It stayed contained in the range. This happens about 80% of the time. 75 to 80% of the time, the middle part of the day does nothing. It stays contained within the A range. So very common situation. And you see the market beginning to go up and starting to break. Remember, I'm looking for 2 consecutive candles closing above or below the range of B while trading in C. So if you're still trading in the last part of the day, this is an opportunity. If you have any questions on Day Trade to Win, visit the website. We have a lot of software, a lot of videos, probably over 1,000 videos now on day trading. We're leaders in educating traders on using price action. All our software is proprietary, and so you'll never see MACDs or RSI or stochastics or anything like that on any of our software or on your charts. We code our software. It's proprietary. If you like these videos, subscribe to the YouTube channel. Be safe out there, and I'll see everyone at the next video. Take care. If you're new to day trading and want to learn more on the benefits of trading the markets, visit DayTradeToWin.com. Join the next mentorship class starting later this month, and subscribe to the Day Trade to Win YouTube channel. We focus on price action and we work exclusively with new and beginner traders who want to learn more on how to prosper from trading.